I think the first podcast that I ever did was with Marty.
It was.
Hey, could somebody close that door? And we riffed on top of his rooftop about the
Ender's Game.
Ender's Game, which is really the piece that I was writing as I was going down my Bitcoin rabbit hole.
Yes.
And that what I thought would be good for Marty and I to talk about today was kind of revisiting that, because a lot's happened in the last 4 or 5 years as it relates to the Fed, but that there is this idea, I think it was a Ron Paul movement, and there's a lot of people in Bitcoin that were from the Ron Paul movement to end the Fed. And realistically, like, the movement to end the Fed wasn't very American. It's like, just by some dictate, we're going to end the Fed. No, we can do one better than that. We're outcompeting the Fed. We're not asking for permission. We're not doing things by dictates. We're just providing a better solution. So kind of wanted to just talk today about what's really happened post-COVID, because it's been extreme. It probably actually predated COVID by about 6 months. But
well, that's what I was just going to mention. We had a slide, on our 1031 presentation yesterday that quoted you in October of 2019 saying, prepare yourselves, the Fed's about to print like you've never seen before. And this was, I believe you were reacting to the Fed's reaction to the repo spasm in September of 2019.
Yeah, and I think that's one thing that when I go around and talk to people about Bitcoin, I remind them of the fact, so people, they think that the $4.9 trillion new dollars that the Fed has created since COVID was because of COVID. And in my descent down the Bitcoin rabbit hole, I figured out that it was inevitable, that it was always inevitable, and that it had nothing to do with COVID. It had everything to do with system leverage. And that even though memories are short, people remember, if they remember anything, that the Fed in the 3 months following the COVID lockdown, which was really March 12th of 2020, the Federal Reserve printed $3 trillion in 3 months. It was crazy, and it was extreme. But on September 19th, 2019, the repo markets broke, and the Federal Reserve printed $75 billion in a single day. And that not only did the repo market break before COVID, but there was a massive oil imbalance. Like, people don't remember oil going to zero, but that was forming in the, like, that didn't just magically happen. That was there. And people don't remember that. But that inevitability of, and even where we sit today, like, they're going to have to print even more money. And that quote I think Anil put out on Twitter was like, all we know at this point is that they're going to have to print money, and they're going to have to print a lot of it. And it doesn't matter wherever we're at the time continuum, they have to print more money now than they have in the last 4 years. And it's because of the degree of system leverage, nothing to do with COVID, because ultimately an exogenous shock was inevitable. And building a system that had such a degree of leverage would always dictate that they'd have to print trillions more. And that's a real problem.
Yeah, it is a real problem. And I think, again, looping back to the repo spasm, why did that happen in the first place? I think it came to be known that you had one of the largest banks in the country actively rotating out of U.S. Treasuries and into cash, which created a liquidity crunch in those overnight markets. So you had some of the active players forward-looking, saying, I'm not very comfortable holding these Treasuries. So even inside players are beginning to notice, or did begin to notice, the writing that was on the wall. And I wrote about it last night in the Bent when I got home from BitDevs. If you just look at the Fed funds rate chart over the last 40 years, it becomes glaringly obvious that the Fed is out of ammo. Like think about what Volcker did in the early 80s, doubling rates from 9% to 19%, more than doubling rates. That was an effective measure to contain inflation in that period of time. Today, we just did the same thing effectively. We doubled interest rates, but it went from 25 bips to 50 bips. And that has no effect on inflation. Like, people now need to find an extra quarter to pay back more interest, where they need to find $9 extra in the 80s. And so it doesn't really adjust opportunity cost and prevent people from going to take out loans to buy things that are getting increasingly scarce, which is just going to exacerbate inflation.
Yeah, if you look at any sort of interest rates, Fed funds, 10-year treasuries, it literally just looks like a dying patient. It's like there's a pulse, up, drop off, up, kind of come back, and it's just like flatlining, right? And I think that what that does mean is that they're at the end of the rope, and that the way I looked at the financial crisis, I was working on Wall Street during the financial crisis, but I didn't understand what was happening. It was only until I started to become interested in Bitcoin, and at the same time that I was going deep down the Fed rabbit hole in 2016, 2017, almost a decade after, that I figured out that we were just further out on the same curve or on the same ledge that we were at during the financial crisis in 2007-8, and that we had a problem that was too much debt and unsustainable debt. Not just at the federal government level, but like system wide. The whole system was levered 150 to 1, but there was $52 trillion of very vanilla credit in the U.S. system in 2007, and the way that QE works, it just pushes us further out in the ledge. So we took an unstable and unsustainable credit system, and now we're sitting at a credit system that has $88 trillion of very vanilla liabilities. And that's literally how QE works. They put more dollars in the system to create more credit, and that more credit actually ultimately breaks the system and then merits or demands that they put more dollars in the system to keep it propped up. But to Marty's point, they can only reduce interest rates so low, and that's what they do by printing trillions of dollars. And people start figuring it out. They start going to the grocery store feeling that, inflation is not 7.5%, that beef costs 50% more from prior to the latest rampage of more than doubling the money supply. And that hits them hard. It's not Ukraine, it's not Russia. Maybe those things accelerate things, but people forgot that beef was 40% higher before there was any rumor of Russia invading. So I do think they are going to have to print money, but the ability for them to continue to do that and keep the system contained seems very precarious. Yes,
and I think it's important too. We're talking about the mechanics and like the actual printing, but when we're talking about the context of this conversation and framing the Fed in competition with Bitcoin, I think it's important to really hone in on and that's why we originally met to have a podcast about Ender's Game, is because what I particularly like about that piece that Parker did is he highlighted what was Ben Bernanke saying in 2005, what was he saying in February 2007, how was he thinking that the market was going to react to Fed policy. And if you just read the receipts and then try to amend them with what actually happened, these people have no idea what their policy is going to unleash on the markets. They can't predict the impact that the manipulation of the interest rates and the money supply that they inevitably embark on is actually going to have. They cannot control it. And then in the framing for this conversation, comparing that to a system that competes with Bitcoin, that's the beauty of Bitcoin. You can literally validate exactly what's going to happen in terms of Bitcoin distribution on a block by block basis, where you know exactly what's going to happen when. And when we're talking in the realm of competition, like for me personally, that's why I love Bitcoin, because it's much more predictable and it does exactly what it's going to say it does.
Yeah, that is something that Marty brought up that I do like to remind people. It's been a while since I went back and I read all these Fed transcripts, but most people know that the Fed publishes minutes 2 weeks after the fact, but they publish the whole transcripts from their meetings 5 years after the fact. And that if you go back and read them from around the financial crisis or whenever, it's like reading a book, knowing the ending of a story, but that the people in the book don't know what's going to happen. And so you can actually read it with a very objective review of history. And people look to, especially in the legacy financial system or legacy financial industries, whether it's hedge funds, investment bankers, they all look to the Fed as like this, the Fed wouldn't do X unless they knew. And they think of them as experts. But if you go and have an honest review of history, they're not just wrong, they're like chronically wrong. Whenever they make a forecast of what they expect themselves to do or what they expect some economic impact, And there was this instance where they did a roundtable, and after quantitative easing, they discussed, what are we going to do first? Are we going to increase short-term interest rates, or are we going to start to unwind QE? And they went around the table. It was like all the presidents, all the governors, were 16 total. 15 out of 16 of them said one way. 3 years later, they did the opposite. And it was their own actions, right? But it was just highlighting the point that just looking at the scorecard, they're always wrong. They don't know what they're doing. They can't know what they're doing, and they don't have the temperament to be managing our money. And that's where we come into to Bitcoin, which is, I think that there is a very fundamental truth that is a central bank can control the supply of its currency. They can't make people value it. And that there are two kinds of people in the world of Bitcoin or crypto. There's certain people that are trading crypto to make more money. And then there's other people that have figured out that Bitcoin is competing with the money and it's at a better alternative. And that if you give people two alternatives, one in which the government prints trillions of dollars, and trillion is really a number that's too large for any of us to actually conceive, or one that doesn't have the ability to be printed, 99 out of 100 people would choose that second option. It's just common sense. And central bankers might not be stupid, but they are morons. And it is very easy to outcompete them in Bitcoin.
Yeah, I mean, and going back to your comments earlier about the audit the Fed and the Fed movements, that's the beauty of Bitcoin. I mean, Hayek said it perfectly. You're never going to change the money. You're never going to fix the money until you find a sly, roundabout way to take it out of the hands of the government. And that's exactly what Satoshi has given us, that sly, roundabout way where we don't have to ask permission. We don't have to wait on these central bankers to manipulate monetary policy in a way that we think it should be tweaked. We can literally go plug in ASICs, plug in nodes, start transacting on the network. We do not have to ask permission. We have our sly, roundabout way to do this. And I think there's, like you said, Parker, 99 out of 100 people, when you put those two options, do you want a monetary system where they can just print trillions out of thin air, or do you want one where it has a fixed supply? Like, yes, once they come to understand that, they're going to choose Bitcoin. However, we live in this weird historical anomaly where for the last 70 years, 50 years, 100 years, arguably, we live in this fiat system that sort of, I'm 30, born into it, was never really questioning it until I was 18, 19, 20. And people just have this weird mental blocker where they just take things for granted. They're like, oh, no, the dollar works. It's money. This is what money is. They never question what is money. And so I think we're in a phase right now with inflation ramping up. People are beginning to ask, okay, maybe my conception of money was a bit wrong. And we're at a point in history where people are going to be looking for alternatives. And luckily, Bitcoin is going to be there for them.
Yeah, I think that what I have noticed, because I do go around and educate a lot about Bitcoin, that when I talk to people that run private businesses, they feel that, like, they feel that the disruption to their everyday by all of the consequences of the money printing. Because when prices change, they don't just change ratably like theoretical Federal Reserve economists think they might. That it literally screws up the communication channels for all businesses. When I go and talk to people in high finance, they look at it and they're like, the Fed will never let it happen. But people, including their businesses, are survivalists. They have to operate out of self-preservation. And that when I explain these ideas about the Fed and what they're doing and that it's inevitable and why, the private business owner or the individual that is first generation wealth, the person who's created their value in the world, that understands how hard it is to create value, like, it's like light bulbs go off. Like, I just connected dots. And that when they understand that there's an alternative, and they are also going to, like, I think the most common thing I hear about is like, oh, I just had my first $400 grocery bill. Or, like, where people are understanding that their basket of goods isn't purchasing as much, and that really, there's some people say like inflation is theft, but like what it is in my view is it's worse than that. When you have money that's engineered to lose its value, it create like what your savings is the net between what you have produced for others and what you have not yet consumed from them. And when you are earning a form of money that degrades in value, it actually creates a disincentive to deliver value to other human beings, because any value that you deliver to somebody is going to purchase less from somebody else in the future. Why would you do that? It doesn't make sense. And when you force that onto 300 million people, billions of people, you're going to get some really fucked up outcomes.
I think we're seeing that right now. And then like zooming out and just looking at these two competing monetary systems, just from a structural basis, like what do you want? Like systems are like economies are complex systems. Monetary systems are complex systems. Pricing goods in an economy takes very local information to accurately price supply and demand at that given point on the globe. And so what we have really, when again framing this in the context of competition, central banking versus Bitcoin, you have central banking, which is a completely centralized, it's literally called central banking. You have a centralized system trying to granularly control a complex system, or something that should be a complex system, which is an economy and a monetary system. Like the Fed Reserve chairman, the board members, they are literally geographically far away from the granular information that should be deciding pricing on the ground. And their manipulation of the monetary system perturbs what could be accurate pricing mechanisms. Bitcoin is the exact opposite. It's an emergent distributed system that allows individuals to plug into it when they need to move their Bitcoin when they need to, and to decide to interact with somebody else to purchase or sell something in the economy. And that grassroots distributed mechanism that Bitcoin provides the world, I think just looking at these from pure systems architecture makes a lot more inherent sense to me. Like we should have an organic, free market, distributed monetary system that allows individuals in this complex system to make decisions for themselves.
Yeah, I think that's a really good point, or at least for me, understanding the impact of like what a pricing mechanism is. But in a piece that I wrote, or a presentation that I gave a while back, this idea of distributed knowledge, and that central bankers, when I say they can't know what the consequences of what they are doing is, it's like I visualize like a 1,000,000-man march, and then I visualize Jerome Powell talking to the European central banker at Jackson Hole, right? That you just look at 1,000,000 people. Those are the people that have all the knowledge, not only of what their preferences are, but how to build things. And that they definitionally have more knowledge than a couple people sitting in DC or Brussels. And that when the market is communicating information via pricing mechanisms and the Fed steps in to manipulate those prices, it disrupts the whole functioning and creates imbalances. It not only allows imbalances to be sustained, it actually exacerbates it. And I think that, kind of to that point of they can't know, or in certain instances, like one of the quotes that I had in Ender's Game was Bernanke, where this is post 2008-9, it's 2011, the European debt crisis, and the US is going back into a 2008-like crisis. And Bernanke admits, he's like, I can admit that monetary policy is not the solution and that there are fiscal and structural problems. In my opinion, the monetary policy was in fact the problem. But even when Bernanke recognized that printing more money wasn't the solution, his comment was, but we have to be palliative. And it's like, that's when I talk about, like, that's not the temperament of a board member of a private company. It's like you keep doing shit and it doesn't work, and you're also recognizing that it doesn't work, and you do it again. That's like that is the definition of insanity. And that when people are looking at Bitcoin, they can voluntarily opt out now. And that as it becomes more and more apparent and people figure it out based on their local price signals, where people are saying, I'm not going to sell my beef for that few dollars anymore because I might not know that the Fed's printing trillions of dollars. So you got to understand, 99% of people have no concept that the Fed's printing trillions of dollars. They find that information out at their grocery store, and they don't understand it. And like tying this into the last talk, I do think it's really important for Bitcoin. It is apolitical. It is neutral. I don't know. How many of you guys have seen the movie PCU? Do you guys remember that movie? Not many people have seen it. Okay. Well, PCU is this movie where it's like a Jeremy Piven movie. And like, it's like politically correct university and everybody hates everybody. It's like every little like group of people and it's so divisive. And then like they figure out that they actually just hate the man and that the man is like the dean and they're all friends. That Bitcoin will transcend political divide. I think a lot of the symptoms of and why Bitcoin so easily outcompetes the Fed is because it's not just like a number go up technology. It's that when people actually figure it out and it filters values, then we actually have a system where we can be like, oh, I understand that you, like any Bitcoiner shares my values. We might differ at some higher level, but when people start to figure that out, that it will be a healing moment for a lot of people because the system that we're in, when we're just caught in this constant trap with a hamster wheel, it's like you don't know where the problem is coming from, but you feel it in your everyday life, and Bitcoin helps people understand that.
Yeah, no, honestly, I think that's why Bitcoiners popularized the phrase "fix the money, fix the world." I think a lot of us view.
I think you popularized that.
Yeah, you just look out. There's so much divisiveness in modern society, and I would argue that it's driven by the wealth inequality that's been wedged between those who own assets and those who do not, and they've been put into this debate framework by the mainstream media and much of the political class that says it's red team or blue team that's doing this to you, and nobody's focusing on the money. It's the money. We need to fix the money, and there won't be a potential for the type of conflict that we see in today's society because people will be able to live comfortably and they won't need to go out and find a reason why their life sucks. Because if they are so willing, they'll have the money and then go work and make an honest living, save some money, and live. What's the word I'm looking for? A life of dignity. Like that's what fixing the money is going to do for society, I think. And then again, talking about like the Fed chairman and the board members, like they try to manipulate the system. They huddle into this room. I mean, March 2020 is a perfect example. Like, okay, we got to shut down the economy. What do we do? How do we fix this monetary system that we live in? All right, let's change the facilities of how we move money through the Fed window and who can access that money. And that's, again, 13 people deciding something that affects billions of people across the world. We're comparing that to Bitcoin, the software project. Like there's many developers in this room who have contributed to Bitcoin. They don't have to ask anybody. They don't have to meet in a room. They meet in GitHub and they look at the code base and they say, hey, I think it could be better here. And then you have a discussion, a Socratic discussion about will it help the system? Will it help Bitcoiners? And again, thinking about systems architecture, like what type of monetary system do you want to live in? One that 13 people control, or one that anybody could audit and contribute to if they're so willing?
I think that's a great place to end there and get to lunch. I mean, one thing that we will wrap up with, though, is that we always say, well, I don't want to say we always say, but it almost every one of our conversation ends. Marty just looks at me. He's like, we're going to win. We're going to win, and we are. It's inevitable. It's about helping people understand kind of why what is happening around them is actually happening. But the more that people look at, and I just generally sit with one slide, and I've got 13 weeks post-COVID, and I just show people the week by week, hundreds of billions of dollars printed each week, and that Bitcoin just, 6.25 Bitcoin being issued every single block. And then in about 2 years, it'll be 3.125, and we don't ever have to talk about it. When you come, Marty brought up BitDevs. We had, 170 people in here talking about Bitcoin development. We don't talk about money supply. It's not a board of people trying to figure out how to socially engineer everybody else's life. It's just, hey, how do we fix things on the protocol?
Yeah. We're going to win.
We are going to win.